Speaking about shifting sentiment, let's move on to the other big story of the day, conflicting trade headlines. Those sparked market moves in every direction. Let's head to Eamon Javers at the White House, where he's been tracking the trade turmoil. Eamon.
Yeah, Melissa, we were going in every direction here at the White House today, too, just trying to figure out exactly what the president meant earlier today. He was in the Oval Office. He was asked by reporters about the China trade picture, where we stand in negotiations. Here's what he said that gave the market a sense that there might be some room for optimism here. Take a listen.
We put on tariffs on $250 billion worth of goods, and we have another $267 billion to go if we want to. We may not have to do that. China would like to make a deal. Our country has done very well, and China, as you know, has not done very well.
So the president there saying we may not have to do that. That is, we may not have to put on the additional tariffs that the president's been discussing as a possibility. It gave a lot of people the sense that there might be something behind the scenes. But when you talk to aides here, as I have, White House officials immediately after those comments were cautioning, look, the president here is simply expressing general optimism about the negotiations with the Chinese. Things have been going well this week. No major concessions, nothing impending behind the scenes. They say no deal imminent, but the president's in an optimistic frame of mind. They are talking, and everyone here looking ahead to that G20 meeting at the end of this month, in which the president and Xi Jinping will have a face-to-face meeting. If there's going to be a deal, folks here speculate that it would be around that time, not this week or next.
Eamon, earlier this week it had been reported that perhaps the vice premier of China would make a D.C. visit to resume talks with the Treasury Secretary. Is there any word on what the next steps are?
Well, they've been exchanging letters, right? So we had this interesting moment this week when the U.S. side received a letter from the Chinese. And what folks here tell me about that is that that's an indication that those talks are going on behind the scenes, that they are exchanging, things in writing, but that no major concessions have been offered so far by the Chinese side. So we'll see if things heat up next week. Remember, we've got Thanksgiving coming up. The president's going to be going to Mar-a-Lago for the holiday. So it's not clear how much momentum there is going into the Thanksgiving week, but we'll see in the early part of next week. Anything can happen around here.
That's the understatement of the year. Eamon, thank
right.
you. Eamon Javers at the White House. So it's been weeks of this dramatic back and forth. Why are we still seeing such fierce market reactions to these trade headlines?
You have to. I mean, really? I think BK said it. I think you said yesterday that there's almost a Trump put. Every time the market is negative, you always see one of these tweets or you see a headline flash out. How can you, if you are a short seller, sit on your heels when you see a headline like that with the ramifications to the overall market? It could rip higher if there's an actual deal that gets done.
So just to be clear, I did not mean that as a good thing, that there's that every time that the market goes lower. I'm just trying to clear it up. That I don't think it's a good thing that every time the market goes down, we get a tweet or a statement that, hey, trade's getting better. Then a couple hours later, somebody else comes out and says, you know what? No, trade isn't getting better, or it's not as far as long as we thought. At some point, you erode the confidence of the market. I think this is a terrible strategy, and frankly, I think it needs to stop for the health of the market.
I think you're seeing it again. Once we see more and more of these headlines come out, I feel like the market reaction is less and less. We're getting a little bit more inured to it.
Yeah, and I think it also sets the stage that we get to Argentina, we get to the G20, nothing happens, and then what does that mean for the market? Because then that put is really not there, and then we have to start focusing on the Fed again, and then we know that this president really doesn't like
to look at tariffs coming back into place again, because if nothing happens, then all of a sudden he starts to bark a little bit louder, President Trump, and then we start to think about the other section, 267, basically coming on again on tariffs, not in June, but in January, and the market will react the same way. It would sell off.
Here's an interesting question, at least I think, because it's my question, Tim.
Okay, all right. It's got to be interesting. I'm looking forward to it.
So G20 comes and goes. Do we sell off, or do we just sort of, fiddle around at these levels? I mean, is that going to be a reason to sell the market?
Well, if markets had a lot of confidence in G20, I think you'd see it in markets now. And therefore, I don't know that G20 coming and going is going to be a sell the market dynamic. Hey, we walk in, this is awful. What everybody's saying here, though, is be careful about as we get into next year. And I will continue, even though I'm trying to sound constructive on the market, I would like to paint the picture of 2016 Q1 light is what this market could face if you tack on 25%. You've got a Fed that might be moving too aggressively into slower growth. You've got a dollar that's running out of control. And by the way, everybody thought we were going to have a year-end rally. Everybody thought we were going to have this seasonal dynamic, this post-midterm election dynamic. Guess what?
Not over yet.
We've got a month left to go.
I know.
Well,
That year-end rally, the time frame's getting smaller and smaller.
Especially from an event or a catalyst standpoint, December sets up to be really aggressive. We have the potential for a budget showdown. Okay, that's in the first week of December. We have Fed funds futures are only pricing a 65% chance of a raise. I think the Fed is damned if they do, damned if they don't. And then it's going to be a lot of pressure to get a trade deal done before these new tariffs go. So I actually think that this could be the first year since 2008 that the stock market closes down. The S&P is up 2.5% right now. That's not such a bold call, okay? I don't know how many days.
And not
left.
shocking from you.
No, but what I'm saying is that I think when you consider the catalysts and the political rhetoric around all of them, not great.